Morning, Cass.
Morning, Vince. Thank you for joining me this morning. It's been a while.
Yeah, I know what happened. We kind of fell off the face of the earth there.
I think the team grew. We had some
Yep.
changes in the team, and you've been spread a little thin, so I haven't been able to nail you down.
Yeah, that's right. Kristen's on mat leave for now, so been
Yeah,
having to jump in. We've added to the team, so now here we are.
it's great. Always fun when the team grows.
Yeah, so now we had some crucial decision yesterday made by the Bank of Canada, which everyone has already talked about. So I don't think we'll spend too much time on that, but
No.
we took it upon ourselves to take this opportunity to get caught up
Yeah,
and put
yeah, I
something
think it's
out.
great. Yeah, so as you mentioned, Bank of Canada made an announcement. Luckily, no more rate increases for the time being. So we're staying at our nice rate of 6.7 for for prime rate right now, which
Yeah.
as I said in our group text yesterday with the group, like it's sad that that's a win for us right now. Would love to see it come backwards, but I don't think anyone expected that yesterday anyways. Just we'll take the wins where we get them right now that it hasn't increased, and more to come on that, I guess.
Yeah, no, not to rub any salt in the wound, but a year ago we're at 245, and now we're now we're 6.7.
Choke on
So, I
that.
mean, I mean, obviously everyone's, we can joke around about it, but it has impacted people severely, obviously, us included.
Yeah, absolutely.
So yeah, let's chat about it.
Well, I mean, there's the good news is that all of a sudden things are picking up.
Right.
So the rate hasn't changed. We've had this steady incline. We're at where we're at, and we're going to stay here a little bit longer. But all of a sudden, the market's picking up. I know I've been doing a lot of purchases, a lot of refinances this year. So maybe let's talk about that. Like why we're so busy. So
Yeah.
first thing I wanted to chat about is maturity. So do you want to discuss why all of a sudden we have so many mortgages coming up for maturity in 2023 that's keeping us hopping right now?
Yeah, well, we have our book alone has grown. So we have a number of clients who are coming up for maturity this year, but they're included in the group of $28 billion of mortgages coming up for maturity in 2023.
Yeah,
28
that's
billion.
incredible.
It's a lot of
That's
it's a
incredible.
lot of it's a lot of mortgage. So that's in Canada alone. And the stat is that 80% of those clients are in a fixed rate mortgage. And what that means is that in 2017, the average term is 5 years. So let's say if we look back 5 years ago, it's 2017. They were probably trending in, close to 3% of a 5 year
Right.
fixed rate. And so now, if we were to just compare that to what prime is at right now at 6.7, there's going to be some severe payment shock for people.
Right.
Um, so that's a big thing. And people who are in a variable have felt the pain throughout the year.
Slowly.
So maybe their payment shock is not going to be as big. In fact, maybe we'll look at other options for them, and they'll maybe get some relief
Right.
at maturity. But yeah, there's a significant number of clients that are coming up for maturity in Canada and in our portfolio.
Yeah. One thing that I've talked to a lot of people with, like we reach out to our clients that are coming up for maturity in advance to start preparing them. Usually like 6 or 7 months in advance, we'll start engaging in that conversation just to know what their plans are, if we need to move their mortgage, if they're taking money out, whatever. But a lot of people have come with the offer from whatever mortgage company they're currently with and saying, like, all of a sudden my rate's going from 3 to 7. Like, this is crazy. I can't afford this. What are my options? So a
Right.
lot of people think, well, I can't move my mortgage because I don't need any money out and I'm not moving right now. I'm staying put. So do I just have to renew? They've given me this offer. Is that my only choice? So
Right.
what are you telling people their options are right now?
Well, luckily this past year we took the opportunity to, as rates were going up, to develop a 7-step process to evaluate people's current situation in terms of their rate and how the payments have crept up and how they measure up against their budgets and so on and so forth. So we are using that 7-step process now to basically evaluate a client's options. And that's really not just going to look at the mortgage, because remember, I like to tell people, this, Cass, I tell you this all the time, and I tell the team, a mortgage renewal is not a renewal, it's a maturity. which
Right,
means that,
exactly.
right, it gives banks like to use the word renewal because they like to keep you in a box, think that
Right.
the only
It
option you have is to
implies that
renew.
you're staying with them without even saying it.
Correct. Exactly. So it's very psychological. I compare this to maturity is very comparable to an athlete whose contract is up
Yeah,
for
free
maturity,
agent.
right? Now they become a free agent. You now are a free agent as a client. And so therefore you have an option of sticking with the bank, a little different from the sports side, because sports, maybe the existing team doesn't want you anymore. But
Yeah,
the bank will certainly take you. They will certainly earn interest off of you if you want to stay. But the other nice piece is that you can turn around and go to market. And so this is what we do with our clients. We're going to go to market and evaluate what is being currently offered by the current lender and compare it to what's being offered out in the open market. But we even go deeper than that, Cass, as you know. Our 7-step process allows us to evaluate a client's budget. So it's very important to understand what their cash flow is like currently right now. Things have changed in the last 5 years for them, no doubt. People, 5 years is a long time.
it
It's a
is a
short
long
amount of
time.
time. It's a long time. There's a lot of things that go on, right? You could have had babies. You could have had something occur in your, in your life that changed
Career
your overall
changes.
lifestyle,
Like,
career
look
changes.
how
Yeah.
frequently in our day and age, how often people are changing careers. So their income could
Yeah.
have changed greatly in that time.
Yeah. Yeah. We see that all the time, right? So that process allows us to evaluate that and really look at the holistic picture of their finances, not just the mortgage. We want to take a look at the full balance sheet. So we update the
Right.
balance sheet. We get documentation in regards to their income, and really we kind of do a pre-approval all over
Right.
again to see and compare what they qualify for. And we also really want to do a needs analysis and find out what is it that they're looking to do in the next 3 to 5 years, right?
Exactly. And then we can make recommendations from there. In some cases, yes, I will work with a client. I just did probably 4 in the last week where it was deemed that they are with the right lender. That's the most suitable lender for their needs. And I will work with them to sign that renewal and figure out, which term is the best. So, what are you telling clients right now in terms of term and rate? Fixed, variable, how long of a
Right.
term? Should they re-sign for another 5 years?
I would certainly say we discourage clients to stick with another 5-year fix. Let's just say, I mean, right now we're, as rates have come up so quickly in a very short period of time, it's almost like a perfect storm to stick someone into a 5-year fix for a long period of time. And really now all of a sudden, as if rates go down, you'd be stuck up
Right.
top, right? So I love flexibility. We always preach flexibility to clients and put a lot of value in that because things change so often in people's lives. So we probably, for the most part, don't recommend more than a 3-year fixed term
Right.
to clients. And we can usually find some really good offers in the 2 to 3-year range. And some lenders will offer a more attractive rate on a 5-year term right
Course,
now
yeah.
because they want people to stick with that. So I don't know. We're looking at all of it, but I would say if we're going fixed, we're usually sticking with a 2 or 3-year term right now.
Correct. Yeah, I agree. That's what I've been recommending to clients right now as well. And I often say, like, I know it seems scary because you don't want to see those rates come up again. So you're thinking, oh, just lock it in and forget it. But 2 or 3 years offers enough time to pass to see what's going to change. We are hoping these rates start to come back down. We'll start to see some changes. It gives us a point in time in a long enough time that we can see some patterns, but short enough that you're not going to be locked in for 5 years. To your point, is a very long time where we can just have a point in time to check in. You're now a free agent. Let's shop around again. Is there a better rate or has something changed and it's time to move? If
Right.
there's not and the market remains the same in 2 to 3 years at that maturity
Right.
date, we'll help you renew again then.
Right. One other thing I want to mention, and just caution people who are maybe not clients of ours yet, but are clients of a bank, for example, and their mortgages coming up for maturity. Bankers right now in branch and the ones that are connecting with clients through a 1-800 number at home are putting a lot of pressure
Oh, yeah.
on clients and are definitely making it seem as though they don't have a lot of options or their options are very limited and are very time sensitive. So I mean, this may seem like common sense, but anytime you feel rushed that you need to make a decision within a certain period of time, example, this rate that I'm going to offer you today Cassandra, is only good for the next 48 hours. After that, your rate is now going to be quoted again. That is pressure sales. It's happening all over the place. I would caution anybody who's getting hit with that to really have an impartial person like a mortgage broker specialist really look at it and give you an honest example. Again, it has to be someone you trust or someone that's been recommended to you by someone you trust, so that you can really evaluate your options. I don't think anyone who's adding pressure or fuel to the fire these days is a person to work with. That's my personal opinion. So I just wanted to throw that out there as a buyer beware.
Yeah, no, that's a good point. I've had a few just like friends reach out to me with letters they've gotten from their banks and just say like, I'm just a little worried. They're giving me a deadline and they're urging me to go for 5 years, saying like basically the sky's gonna fall. And they just wanted some reassurance from a friend who's also in the profession. So I am seeing that some people have actually shared the letter that they've gotten, and it's quite forceful, to be quite honest. And what we say in our in our group is piano, slow it down,
Piano,
right?
piano, slow it down.
Piano,
Exactly.
piano.
I always like to sprinkle a little Italian in there for sure.
Yeah, slow it down. Let's think about it, and don't be rushed to make a decision. So that's great. So that actually takes us into the real estate market. So we're seeing some changes in the real estate market, and I think that's re-engaging some different clients that we haven't really had the opportunity to work with in the last couple of years. So tell us, what are you seeing in the industry?
Well, I mean, prices have no doubt come down, and obviously by different amounts in varying, markets. But by and large, it has reengaged our first-time home buyer segment, right? I mean, those are the poor first-time home buyer last year before, were striking out. I mean, up to 30 times. I remember we had clients who just couldn't get a home, and they were, it was a very emotional experience for them. Now, I'm happy to see they have more leverage.
Absolutely.
And also there's just more sanity when it comes to buying and selling. We're not seeing, all these multiple offers to the degree that we saw last year. Yeah, bully offers, and people just going in and not understanding the risks involved in making certain decisions, right? That are high pressure. Again, we just talked about high pressure.
Well,
you
and
can
absolutely, the first time home buyers last year, 2 years ago, they had a lot of pressure, but they were nervous going into their first purchase, right? They understand that it's a risk. It's a huge purchase. So they would only feel comfortable going in with conditions of financing, so on and so forth. And we know that their offers with conditions, they weren't even looked at. They were thrown out because there was always somebody coming by with a cash offer, no conditions, quick closing. Of course, that's going to be the most attractive to the buyer. And there was no negotiation space because everything was going way over asking. So I had a number of first-time home buyers just kind of call me when things got really hectic and say, you know what, like, we're getting our hearts broken every weekend when we go out to these open houses and put offers in. We're going to put plans on hold for a period of time, and we'll reach back out. And when rates started to go up, I'd reach back out and say, hey, prices are coming down a little bit. What are your thoughts? And a lot of them would say, oh, these rates are crazy. These rates are crazy. We can't afford these rates, because they got so used to hearing about these super, super low rates. And then I have to say, the last 2 months, I've had so many of those first-time home buyers reach back out, and they've actually been successful in their purchases. Because, to your point, the prices are lower. Now, the interest rates are higher, but these people have said, we just want to look back and see, do this pre-approval again. Now that prices are lower, even though the interest rate is higher, can we afford it? They don't know until we sit down and go through the scenario with them, right? So redoing some of these pre-approvals has really helped these first-time home buyers visually see on our calculators, this is possible. And even though the cost of borrowing seems very expensive, because that one number, your interest rate, is higher than it was when we quoted you 2 years ago, your cost of borrowing overall is actually less. And that is
the purchase price is lower, right? So essentially you're paying interest on a lower amount. I mean, we're seeing prices even 20% lower, let's just say, in some areas. That's a significant amount. It's a saving of down payment, saving of closing costs, right? Land transfer taxes are lower. lower taxes. What? I mean, that's crazy.
Yeah.
That's when you see lower taxes. But basically there's some savings there, right?
Yeah.
So it's encouraging. And we're definitely seeing them come back into the market and having more courage to look at their numbers.
Yeah.
Yeah, it's nice to see that, Cass, that you're seeing clients that are coming in who were working with for so long, who got discouraged and said, hey, I want to put the brakes on, but now are saying, let's take a look at it now. And we've been
Yeah.
successful with quite a few of them. And I think it's going to continue because the spring market is upon us,
Yeah.
or it's starting. And so as people thaw, you're
Oh, that was a good one, Vince. That
yeah,
was
as
a good
people
dad
thaw,
joke right there.
I use it all the time.
Yeah.
As people thaw, they're going to be out shopping,
Yeah.
and you're going to have those people who are looking to sell their homes as well and purchase something else, freeing up real estate for that first time home buyer, right?
Yeah.
So it's good. There's some good
Yeah,
news there.
it's good. And just one thing I wanted to add about first time home buyers is that another reason why they're successful is those conditions have become normal again. We have not been able to do for years a condition of financing, condition of home inspection, condition of selling your house. Those conditions were like unheard of almost as long as I've been in the industry, which is coming up on 5 years. It's been pretty much really rare. Now, all of a sudden, that's very normal. So that gives a lot of peace of mind to the first time home buyer putting that offer in, because they have that, 5 to 10 business day condition of financing where they can sit down with us. We can get the approval in hand. And when they've got that piece of paper that says they're approved, they feel a lot better going firm on a purchase. So I think those conditions for first time home buyers and anyone else, right, to know that it's very normal. Because condition of home sale is another one I've seen a lot lately, which is,
Yeah,
I
we're
love
seeing
to see
more.
that,
Yeah.
because in this market, I would much rather somebody know what they're selling their house for when they're purchasing, just because the values have changed so much. So if they're
Yeah,
not
and
going to
you look
sell
back
first,
and yeah, we look back and say, I mean, how many people white knuckled their transaction? I mean, for the most part, it worked out, and obviously we do what we can to plan and put everything on spreadsheet
or
and show them on a calculator.
find solutions when things
Right.
don't go as planned, right?
Right, but I mean, yeah, conditions of finance and conditions in general are definitely more frequent and encouraged, especially for first time buyers, so that we can carefully take them through the process. They understand, and also the other thing that's a little bit unpredictable right now because values have dipped, are appraisals. So what
Right.
we don't want someone to do is, let's say, overpay for a property and not understand. If they overpay and understand the implications of doing that, that's one thing. But if you don't understand the consequences of overpaying or are not prepared for those consequences, I mean, you definitely need to be protected by a condition.
Yeah, a lot of times when I'm doing a buy and sell scenario with somebody, I will speak to their real estate agent to get an idea of what realistically their home will sell for.
Right.
And I find we're usually doing a couple scenarios. Like, if your house sells for this much, this is how much you'll have for a down payment. If your house sells for this much, this much. So they know their window when they are selling their house, and they feel a lot more comfortable, because if they can't get an offer in that window, they can walk away if they've got a condition of home sale.
Exactly.
So, I could talk about first time home buyers forever, because they're probably my favorite people to work with, because I get such a satisfaction when they finally get to purchase. But there's another segment of people that I love, that we have seen a little bit more in the industry. And this is so exciting to me, because if you remember, when I started with you, I had just come from working in the retirement industry.
Right.
And then I got my mortgage license and I came to work with you, and I said, hey, have you ever done a reverse mortgage before? Because working in the industry for as long as I did, I see such a need for seniors to be able to stay in their homes and to be able to afford it for any care services that they need, just keeping up with the cost of living. And I have done, I think, 2 reverse mortgages already this year. It's a really cool product. I'm really happy to see not only are people getting more interested about it, but I see the lenders really coming up with some unique products, and more coming into the market, making it a lot more of a competitive. For a while, there was only really one lender that was doing it, and now we've got like a handful. So I wanted to just touch on reverse mortgages. It's a huge topic that I think we will reserve for another video where we can really go in depth about it.
Totally.
But why do you think reverse mortgages are all of a sudden so popular?
I just think, I mean, costs of borrowing have come up, right? I'll give you an example, a real example. You have a couple, um, generally over the age of 55. So this couple was in their late 60s. They have a secured line of credit on their home. Again, rates went up from prime of 2.45 to now 6.7. That means their monthly payments have gone up. Cost of living has gone up everywhere. Food costs, gas costs, et cetera, et cetera. And so now what's happened is that, they're really covering their costs with their pension income,
Mhm.
which doesn't grow. It grows at a snail's pace, obviously. And so now what's happened is their disposable income has shrunk and they're
Absolutely.
feeling stress every month. And so I think it really comes down to education when we're talking about what a reverse mortgage is. A lot of people have tons of fear around a reverse mortgage, that it's something underhanded. It's not. It's a very useful product, and can be something that is highly valuable for clients. So yeah, we should definitely spend some time on a call, or a Zoom like this, and run through it. Actually, show some examples
Yeah,
to some
absolutely.
people. Yeah,
I think that there was a really big stigma about reverse mortgages, like the whole, oh, I don't want somebody else to own my house. So we'll
yeah,
break down some of those
yeah,
misconceptions
yeah,
and
yeah,
show what the true cost of borrowing on something like
yeah.
that is. But I think too, like most people who just have CPP and OAS, like we do have some clients who are lucky enough to have a pension from wherever they worked, but
Yeah.
that's pretty rare these days. And CPP and OAS, let's be honest, that's not a living wage for somebody to live
No,
on.
and here's the thing. I mean, even if, remember, if you earn too much from
It
a
gets
pension, you get
clawed
clawed
back.
back, right? So again, I mean, at the end of the day, when you're retired and you're on a fixed income, the odds are stacked against you. So it's important to know what options are out there,
Yeah.
that you don't feel stressed every day. Who wants to be retired and stressed? Like, I don't know. Stress about money in
Yeah.
retirement is not what the retirement sort of vision is, when
Right.
you look at it, right?
Yeah, and even a reverse mortgage I did earlier this year, the clients were in their late 70s and early 80s. And
Mm.
through the process, he said, well, I'm going to work anyways. I enjoy working. It keeps me busy because he was very apprehensive about the reverse mortgage. We cleaned up some debt, got them all set, took some money out so they could actually go on vacation, which they hadn't done in like years and years and years because
Right,
they were always in the grind, right?
right,
Always working paycheck to paycheck to keep up with their mortgage and keep their debts low. By the end of the process, once it actually funded and I checked in with him, he's like, I think I'm going to take it a little bit easy, you know? So
mm,
I think he was telling himself for a long time that he enjoyed working because he felt he needed to continue
right,
to survive. And we offered the solution. And in the end, he was like, I think I'm going to take a bit of a break and, tinker a little bit, cut back my hours, spend more time with my grandkids and, you know, enjoy not having a mortgage payment.
right.
So I love those stories. I think that is
Right.
amazing. So I'd love to do
Yeah,
some case
it's
studies and
practical. It's real
yeah,
life. It's real life.
do do a bit of a deep dive on that. So we'll save that for another day, but I did want to
Okay.
mention it because I want people to start thinking about it, whether it's for themselves or their parents, that there are solutions out there that are becoming a lot more popular and more competitive. We don't
For
just have
sure.
one lender to rely on. So,
No, exactly. Yeah. No, competition is good. That's what we want, for sure.
mhm. Yeah. So
Good.
that's all I had for you today, Vince. I just wanted to do a quick check-in on some of these things that I'm finding I'm talking about every day, because I think if I'm talking about them every day, I'm sure you are and the rest of our team are. And
Yeah,
probably the people out
absolutely.
there that we're talking to, they're talking to other people. So I want people to feel comfortable reaching out that we are very knowledgeable on these topics. And it all boils down to suitability and what's best for you. And we can't help you with that unless we know what your situation is, right? So
Yeah, no. So you know what? As people know already, they can reach out to us, and our team, and we are here, for them. If they already have someone they trust, that's the bottom line. Just find
yeah,
someone you trust, and
yes.
that person will guide you in the right to the right path. And that's really, the most important piece here. And don't feel isolated, like you can't, you don't have any options.
Yeah.
It's really important to find someone you trust and open up and let that person help you
Yeah.
out, and then go from there.
The other thing is, a lot of people will call me and be, I don't want to waste your time because I don't know if I need to make a change. So I didn't want to reach out. I don't want people to think they're wasting our time. Like that's our job. If we do an assessment for you and deem that you're in the right position, I sleep better at night knowing you're sleeping better at night. You know, we'll work together in the future, but it's important to know that we are approachable, and you don't feel like you have to close on a mortgage just to call and ask us a question or ask us to do a quick review. That is part of the service of being part of the Meta family and being a client of our brokerage. We're happy to just have a look and give you some peace of mind.
That is well said, Cass. 100% what we're all about. So at the end of the day, whatever the solution is, if it's a solution that means that you're in the right one currently and you're stay put, then you have peace of mind, we have peace of mind, and we're in it for the long game. For us, it's about relationships with clients, and we just want people to benefit from that and our knowledge that we can give back. Yes, of course, we do make a living doing this, clearly, but at the same time, we love helping people out, and we love receiving referrals from them once we've helped them out. So we're happy to do that.
Yeah, so that's great. So that was the last thing I wanted to say, but thank you so much for your time this morning. And I'm going to build some time in your schedule now to talk about the reverse mortgages. So it's not another 3 months before we do this. So awesome. Thank you so much. Have a great day.